Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And we're about 2 minutes away from the end of the trading day. Caroline Hyde, Taylor Riggs on Bloomberg TV for you, counting you down to the closing bell. But of course, to take us beyond the bell, we go to our global simulcast. Carol Massar, Tim Stenovec coming into us from radio, of course, bringing together our Bloomberg TV, radio, and of course our YouTube audiences worldwide to pass through some of these crucial moments of the day. I'm going to say a crucial moment right here is AMC, GameStop hitting new highs. The meme stop love is still there, Carol.
Well, did you check out the short position, too, in something like AMC? We have seen it on the rise. It's up about 19% as a percentage of float. So watching those meme stocks continuing to kind of make their mark, Tim, on our trade. Even though we're all talking about inflation, we're also watching those meme stocks.
Yeah, who thought that, meme stocks would go away when the economy started to reopen and people weren't playing with their Robinhood accounts and they were going back to work? Not actually happening, guys, with the likes of AMC and GameStop.
Yeah, I mean, on the day where we all get excited about boarding planes, airlines outperforming, some of the cruise liners too, it's a mixed day when we're actually really thinking about how we can still, well, look at what Reddit's up to and moving higher on COS up 23%. I mean, this takes us back to the good old days of January, February.
Romaine is rolling his eyes, Caroline. He is out there studying fundamentals. He's a firm believer in it, and he is dying and rolling his eyes at all of us, Caroline, doing this today. But you bring up a good point. We're continuing to see, though, some deterioration within the equity markets. We on TV have been talking a lot about the big outperformance of big tech relative to small caps, and you're seeing it a little bit today, though mostly some red, Caroline.
Yeah, it seems to be trying to nudge into the green on the NASDAQ, but we're basically flat, off by 2 points on the NASDAQ. Flat as we come, 13,657 is where we end trade. Volumes down by about 5 percentage points on the NASDAQ versus your usual average. We're down in volumes just slightly on the S&P 500, off by 0.2%. We're down by almost 9 points, 4,188 is where we finish. And the Dow at a 34,000 handle, off by 0.25%. But the key underperformer, Carol, of course, on the day was the small caps, the Russell 2000,
Right.
who was up at the start of trade and then swiftly fell.
Yeah, listen, I'm thinking of Romaine. I know he loves to mention those small caps. You're small caps down about 0.9%. So interesting whether or not that's kind of a vote to some extent on the reopening and the reopening trade, Taylor. We'll have to see how it plays out the rest of the week.
And we go down from the majors into some of the sectors for our radio audience. It feels really balanced. You have half green, half red, at least from what I'm showing you, even though the overall tone has been red. And I think what really sticks out to me is the defensiveness that was underneath this surface, where you have durables, real estate, some of the bond proxies, those are up about 0.5%. Foods and staples, right? So those, as you think about, up 0.4%, the leaders on the day. And the laggers, it comes down to also some of the bond proxies. It's banks, it's utilities. Those, of course, are moving when bonds are moving. It's interesting on a day when bonds are rallying that those are the laggers. And energy, of course, continues to be a big loser, Carol, as we've been talking a lot about perhaps maybe some unwinding of the risk on tone.
Well, listen, guys, certainly Caroline mentioned this, that one of the trades that definitely played out in today's session was the reopening, and particularly when it comes to hospitality and travel. We saw it play out in the airline industries. You had executives from the 3 biggest carriers in the United States really talking about travel, specifically business travel and long-haul trips, which are so important to their bottom line. So we saw Royal Caribbean among the hospitality industry up about 3.6%. UAL, United Airlines, up about 1.5%. Moderna, that was a big story too. COVID coming out and saying that their vaccine shows to be highly effective for adolescent teenagers. They put out a study. So we saw that stock up more than 3%. And got to mention Square. It was a story we were talking about here on radio yesterday. And today, again, guys, up 2.5%. It is taking on the big financial banks, JP Morgan, in the code for an iOS update showing that they're going to open up savings and checking accounts, Tim.
Yeah, Carol, fintech coming for the big banks. And we heard in the commentary from the big banks in the most recent quarter. You got the gainers, I got the decliners on the day. Let's talk about Micron Technology, lower on the day by just about 2%. It did fall earlier in the day by as much as 3.9%. This after management gave a cautious forecast at a JP Morgan Chase conference. Lordstown Motors, ticker RIDE, reported earnings after the bell yesterday, finished the day lower by around 7.5%. Shares tumbled after the company cut its full-year production expectations, also saying that it would need outside capital, down more than 55% so far this year. Virgin Galactic, Caroline, down nearly 5%. Yesterday was a record day for the company. Its stock surged by a record 28%, but in afternoon trading, it snapped a 7-day winning streak. Morgan Stanley lowering its price target, Caroline, for the space tourism developer while keeping an equal weight rating.
What goes up sometimes got to pull back a little bit.
Yeah.
Also, what goes up is basically everything versus the US dollar. For a radio audience, we're showing now like going cross-asset. I'm looking at the foreign currency area. If you're looking at, lucky enough to have a Bloomberg terminal, type in GMM, global macro movers. You see the Icelandic currency doing pretty well today. Move that by the by. We're seeing basically everything move higher. The euro is at a 4-month high against the US dollar. We're up 0.25%. $1.2246 is where we trade on the euro. It seems as though the dollar weakness story just continuing to bite at the moment, even with some of that inflationary push, that sort of data coming out from the housing data that we had earlier, and indeed some of the consumer confidence pulling back. I'm looking also at the fact that yields dropping, of course, had been perhaps impacting the dollar a little bit as well. It also impacted across the commodity space. Steel off by 1.7%. Remember, we have seen China tamping down, pushing back on commodities inflation. Nat gas up 1.8%, milk up as well. But really, it was a story of copper coming off of its highs as we saw some of that data come out from housing. And sovereign bonds, Portugal, Canada, Greece, Spain. Basically, there is a global move, Taylor, into sovereign bonds.
And you certainly saw that within the U.S. We have a big move. You talk about rate of change when yields go up. Let's do rate of change when yields come down. You're down 3, 4, 5 basis points across the curve. I today really want to highlight the 2-year yield, which is unchanged, and you had a really strong 2-year bond auction come today. Coming into that print, you were right in the middle of where we've been in terms of a trading range, and so seeing some really strong demand for those 2-year bonds was indeed something that the market is taking comfort in, and this really leads us into this inflation as we continue to talk a lot, Carol, about if inflationary fears are here and if they are only transitory.
Yeah, exactly. Something we're going to get into in just a moment. Let's break into it. Earnings coming out with a third quarter adjusted EPS of $6.07 a share. That's a miss. The Wall Street community was looking for $6.40. Third quarter net revenue, that too was coming in a little bit light, $4.17 billion versus an estimate of $4.34 billion. And what's important, Caroline, we want to know what the outlook is. They say they see fourth quarter revenue of $2.29 to $2.33 billion. That looks like a massive beat there versus, based on the estimate of $1.85 billion that's out there. And also talking about fourth quarter adjusted EPS of $1.55 to $1.60. The estimate, folks out there, 43 cents a share, Caroline. So the outlook looks a lot more promising.
A company that loves taxes. Of course, they're talking at the moment. They're saying that they had a great tax season. Lucky Intuit. A great tax season. Yeah, love it. Growing their share of total tax returns and executing on their strategy. But really, we take it back to Intuit up 1.6%. But we also see, of course, Tim, really this focus on, well, we've talked about administration and what they're looking in terms of tax returns, but also the market just cannot train its eyes away from whether or not we see inflation or not, something that's affected some of the retailers.
Yeah, shares higher by 1.6% right now in after-hours trading. The company's CEO saying we had a strong quarter across the company, and as a result, we are raising our full-year guidance. As you said, great tax season, growing our share of total tax returns and executing our strategy of expanding our lead in the DIY category. Taylor, I know you got your eye on Nordstrom. What's going on with earnings there?
Yeah, let's take a look. First quarter loss per share right now coming in a little bit lower than expected of $1.05. Analysts were only expecting a loss per share of about 54 cents. We immediately go to the bottom line because that does include a 41 cents of debt refinancing charge. So we want to make sure if those are comparable or not to some other numbers that we have, but they are on pace to meet their year of sales, earnings, and cash flow. So when we talk about that forward guidance, coming out and saying that they are on pace to meet both the sales, the top, the bottom line, and of course some of those cash flow goals that we continue to see.
Yeah, and what's interesting, and you can see that stock, Nordstrom shares are down about 4% here in the after hours. What's interesting is it was pretty heavily shorted going into these earnings, about 12% of the float. So those who are shorting it, you could see some momentum play as a result of this stock heading lower, Tim.
Yeah, it's look. We're following earnings for Nordstrom. Company shares down $1.38 right now, about 3.78%, a little more than 4% in after-hours trading. I want to talk a little bit about what Morgan Stanley CEO James Gorman said about the Fed hiking rates before his economists predict it, because he's actually got a track record going back a few years, differing with the views that his own economists have. And guess what? Back in 2015, 2016, Caroline, he was right about this, and he thinks the Fed is actually going to raise rates sooner than his economists think they're going to raise rates.
So James Gorman is worried about inflation. The market kind of worried about inflation. We saw it in the numbers coming out of housing data. We saw it coming out of consumer confidence. The consumers seeing inflation up, what, at 4%, Taylor? However, the Fed is not worried about inflation.
I'm going to just bring you these numbers, and Carol, I'll let you be the judge of this. Home sales are up 13% in March, 12% in February, 11% in January, 10% in December, 10% in November, 8% in October. Should I go on?
But we know what's going on right now. Like, everybody's out there buying a home. There's a shortage of supply. You can't build homes overnight. I mean, dare I say transitory, but let's see what happens longer term ultimately. I mean, we did have Rich Clarida coming out, the Fed Vice Chair, saying that the Fed may begin talking taper at coming meetings. And I feel like, guys, we're seeing some momentum, Tim, when it comes to that kind of change.
Did he say transitory? Did he say transitory?
Yeah, I think you should drink if you say transitory, right?
I don't know if he said that.
Look, the only thing I'll say about real estate and housing prices going up is it has so much to do with low interest rates. Because if people have low interest rates available to them, then they can afford more house. They can afford more of that monthly payment. And I think that's why one of the reasons we're continuing to see homes go up in price. Fed Chair Jerome Powell asked about this at press conference after press conference. He says that the home buyers are going to come online, that they are going to start and increasingly build homes. The question is, they cannot do it fast enough, and that's why we're continuing to see these house prices go up.
And I will say about Clouder, I don't know if he said transitory, but he did say, I think it's going to depend on the flow of data that they get. We have heard that before as well.
Nuanced.
Yeah, exactly. All right, that's going to do it for our cross-platform coverage on this Tuesday, rounding out the close of the trading day on Bloomberg TV, Bloomberg Radio, and YouTube. We'll see you again, same time, same place tomorrow.